Very good afternoon, everyone. Am I audible and visible to you? Can you please let me know about the audio video? All right, very good afternoon. So, welcome back in the editorial analysis. Uh, Today, we will be covering the editorials from 9th to 11th July. Okay, there are two extra things which I need to discuss with you. One is regarding the export-import circular of RBI, which is there in the news on, I think, 8th or 9th of July. I'll incorporate it in further discussions. Another thing, so 9th, 10th and 11th July, I have screened out all the editorials. Just one thing, KLEMS database released by RBI. So I'll discuss this further in the upcoming analysis, right? So need not worry about that. So today we have two editorials. Now this is very interesting that they both are actually interlinked to the same topic. So they both are interlinked to each other. Okay. So it would be an interesting analysis, and this is something which we have discussed in the FSR report as well, the financial stability report as well. Let's see what is it. So this is regarding, this trend going on. This is very important for all your examinations now, that credit growth in India is outpacing the deposit growth. Okay, so this is the thing. If you recall, we have highlighted and discussed in the RBI annual report as well and in the FSR report as well. All these reports, they are highlighting this fact. Yes or no, right? So given this thing, so there are two editorials just supplementing each other. Okay, so first editorial, this one has been taken from your business line of 9th July. You can go and read this article. So it has been taken from your 9th July business line. Let's see what the author talks about. In this editorial, the author has particularly emphasized upon the danger of credit boom in India, particularly retail credit boom. So why is this retail credit particularly rising in India? What are the risks associated with? Why do we consider this retail credit boom as a danger? Is it really a danger? What all are the risks involved, right? So let's see what is the author has to say. First of all, what is the news or what is the issue with this thing? If retail credit is booming, what is the issue with that? So, the author says that renewed focus, the issue is nowadays there is this continuous focus or renewed focus on retail lending is there, or the provision of personal loans by Indian banking system, right, as well as by the non-banking financial companies. Now this is giving the otherwise confident RBI some cause of concern. So why rise in retail credit in India, retail lending in India is becoming a cause of concern for RBI? This is the thing. First of all, I hope you know what is retail lending. We have discussed this term in the FSR report discussion also. Retail lending is particularly when you directly lend to the consumers, individual consumers, individual suppliers. We also call it as direct lending or consumer lending. You all know about this, right? Why is this a concern? So continued promotion of retail lending by Indian banking system as well as by the non-banking financial companies is becoming a cause of concern for RBI. Why is this so? Okay. So then the author says that the period after the pandemic year particularly, which is 2020, 2021, it has witnessed a spike, if not boom, in retail credit. It is clear from the evidence. So data shows that it is after 2020 and 21 that personal loan or retail credit is, has witnessed a spike in India, if not a boom. Getting my point? So we have data to support this thing. Now, between almost late April 2021 and late April 2024, so between 21 to 24, the personal credit growth is 76%. So credit growth in the personal loans. What is the issue with the audio? Is it audible to everyone? This is the maximum volume which we can have for this. If you can adjust with this. Is there any issue with the audio to everyone? Slightly low. Okay. Okay, I'll try fix it later. You can we can go with the video at least. I hope so. We can go with the class at least. It is this much audible, yes or no? Yes? Okay. All right. So, between, late 2021, late April 2021 and then 2024, the personal credit growth has outstripped the growth in the non-food credit sector. So remember this data. This data is showing you something. It is showing what? It is saying that the personal loan, growth in the personal loan, almost 76% is far more than the loan or the growth in the loan related to non-food credit sector. Non-food credit, which is just 53%. Now see the difference. Okay, so first of all, what is this non-food credit category? Non-food credit is, related to your industrial services sector's credit. So basically, the credit advanced to your industries, infrastructure projects, agriculture, apart from food procurement, right? Then your services sector, all these categories, they come under the non-food credit. So it is outpacing all these, industry and services and infrastructure. They required huge amount of loans, isn't it? And when you are one of the fastest growing economies, the credit growth in these sectors, they matter a lot. Yes or no? Yes, right? So despite these sectors booming, and then you have to advance a lot of credit to these sectors, still your personal loan is able, growth in personal loan is able to outpace it. So why is this structure happening? Why is this trend going on? Okay, advanced by scheduled commercial banks in India. So this is the trend. So you have the data to say that this is the issue, that personal credit in India is outpacing other credit sectors, other credit growth or categories. Now, this is just a fact. What is the concern? Now, so the concern is that this is personal loan, right? Sometimes there is this personal loan which has a higher chances of default. Also, we are not concerned with all categories of personal loans. There are personal loans against which we have collateral, right? So there are personal loan categories for which we have collateral, but then there is this particular category which we or RBI is concerned about. You can note this down. So the author talks that there's this nebulous category identified as other personal loans. So we are concerned more with this particular category, other personal loans. What all other personal loans? So apart from your housing loan, all these things, loans on automobiles, these things, they have a collateral. So you have house against as collateral, you have the automobile as collateral. But what about those loans which fall under the category of other personal loans? Can you give me an example of all these loans? So for example, personal loans provided for medical emergencies, personal loan being provided for your vacation, personal loan being provided for any kind of travel, right? All these things. Now, they do not have anything against the default as security or as collateral. So we are more concerned with this category called the other personal loan category. Remember this. Have you understood what does this category mean? Everyone, right? So this accounts for a third of the total. This entire boom in the retail lending, 1/3 of it is under this category, other personal loan. That is the concern for us, right? These are possibly loans provided without a link to targeted assets like real estate or automobiles which serve as the collateral. So these are not linked to any collateral, unlike other, categories of personal loans like housing loan and the automobile sector loan. Are you getting my point? So this category is one of the major cause of concern. Now that increases the potential loss in case of a default. So in case these borrowers they default, then the loss increases, isn't it? This is why booming of such credit, growth in such categories, growth of credit in such categories is a concern, because it might translate into systemic risk. Also, this is not something limited to Indian banking sector. It is also being witnessed, or these kind of loans are also being advanced on a greater extent by your non-banking financial companies. Clear? So this is the thing. Then if we talk about the further analysis, author says that the result of the retail credit spike has been a significant shift in composition of gross advances of SCBs over the last 3 years. So this has provided for a significant shift in all your gross advances by scheduled commercial banks for last 3 years. What are the gross advances? All the outstanding loans which they have in the market, right? This particular shift is there towards, so it is in favor of which type of loans? Retail loans. So this shift is now, so you have this trend, now you all will remember this trend is going on in retail credit in India, that more favor is being provided, or more lending is being done in favor of retail loans by Indian banks and non-banking financial companies. So this is the trend. Over that short period, over this 3 years period of time, the share of personal loans in the total advances, gross advances, whatever total loan they have provided, including all categories, the share of personal loans particularly, it has risen from 27.8% at the end of 2021, March 2021, to almost 32.9% by March 2024. So there's this spike, out of all total advances, personal loans are booming actually. They are booming, right? This was also a period in which annual credit growth has accelerated, with credit growth exceeding deposit growth in the last 3 years. Also, not only increase in retail lending is a concern, another concern which Indian banking system has right now is that it is not a problem still, but it can become a big problem. What is that problem? The problem is that credit growth is more than the deposit growth. This is something which we have discussed in one of the previous editorials as well, right? So that is why, although it is not beyond the maximum limits which we can tolerate, but still it is nearing that limit, okay? It is still closer to that limit. If it outpasses that limit, then liquidity crunch can be there, because if you don't have sufficient deposits to supplement your credit, total advances, gross advances, or lending activities, how will you manage all these things? There will be a liquidity crunch or crisis in the banking system, yes or no? Agree? Right? So these are the other certain things highlighted by the author. Moving ahead, now if we particularly talk about, so we have seen the trend, we have seen the problem, from where is it emanating, all these things. Now if we talk about particular risk, why do we consider it as risky? Why are we saying that it is riskier? So author says it is true that increase in personal credit provision became the norm after liberalization. So after liberalization, it is not something new, right? Personal loans, they became a norm after liberalization, with the onset or expansion of private credit in India, private banks establishing more branches in India, right? Which allowed and encouraged banks to lend for purchases which the purchased asset or durable was the collateral, and then to lend against the personal guarantee. So these kind of personal loans, they have been a norm since liberalization. That is not a big concern. But at that time, it was not so risky. Why? Because this was considered safe, not only because there was no, or not huge non-performing loans at that time in the personal loan category, also, so this was considered safe not only because thus far non-performing loans in the personal category have not been very high. At that time, the NPA in this category has not been very high. But now we have data which shows that there are higher chances of default. What does the data say? So, but also because liberalization allowed for these loans to be securitized, traded, so that credit risk can be transferred, reducing the risk carried by the creator of the credit asset. Now tell me, if you remember the asset reconstruction company class which we have had in one of the editorials, yes or no? Right? So we have discussed that, you know, we have a system, we have a provision where we can buy and sell these credits, so they can be traded. So the bad loans can be bought by the asset reconstruction companies, they are then securitized by them, right? So we had the mechanism, but then the NPA rate was not very higher in case of personal loans. Therefore, at that time it was not an issue. But now we have an issue because we, after a very long tedious process, we have been able to witness fall in the gross NPA and the net NPA for Indian banking system, yes or no? If you have been following the financial stability report, we have seen the soundness indicators. In the soundness indicators, we have discussed that, you know, the gross NPA, the net NPA, they have been on a declining trend continuously for past 2-3 years. That has been possible after a tedious hustle with them. So any risk we cannot allow at present, these kind of risk, if it is there. Are you able to understand that? Everyone? Yes or no? Yes. So I know you should remember the data as well. Now moving ahead, so this is the comparison the author is drawing. That this is not something, you know, that personal loan was not existing earlier, it was there, but then it was not a concern. That's why we were not worried about it. Why presently we are worried? Because the personal loan default chances are higher. We have data to substantiate that. Let's see further. So the problem with the retail credit boom is that sustaining it requires diversifying away from safe areas like housing to lending to support purchases of automobiles and durables, unspecified spending desires and credit card outstandings. These offer less robust or no collateral, increasing the potential loss in the case of default. Why are we concerned with these personal loans? So the risks which are emanating is due to they are offering less robust collateral. Even in case of a default, if you want to recover the losses from the collateral which has been provided, it becomes less effective if you have less robust collateral, or sometimes in some categories, or these the other personal loan category which we have discussed, they don't even provide the collateral, they are just against personal guarantees. Are you able to understand that? Right? So remember this thing, other personal loans category. This is the main concern. You can use these terms in your descriptive. Right? Increasing potential loss in the case of default. So it increases the potential or chances of loss in case of default. Now moving further. Then the author says that sustaining the retail boom also requires substantially increasing and widening the universe of borrowers. Now, why is it risky? Try to understand this point. If we are saying that there is this retail boom going on, right? Now, to sustain that boom, you need to have borrowers as well. So, if you are lending aggressively, you are inviting more small borrowers in that case, because personal loan borrowers are generally smaller borrowers. So sustaining the retail boom also requires substantially increasing and widening the universe of borrowers. So adding more and more borrowers, which are smaller borrowers, right, who are more likely to face circumstances that precipitate default. These are small borrowers, so they are more likely to face the chances of default. They are more likely to default in that cases. We are not saying this out of vacuum. We have data provided by the Financial Stability Report. What does the report say? Then only you will be able to understand. So try to understand. The report says, so the recent FSR report flags an increase in the share retail loans in the addition to emergence of new bad loans. So whatever new bad loans are there, so it is slippage, slippage. I have discussed this term with you in the FSR. Do you remember that slippage ratio? So what is slippage basically? Slippage is basically new addition of the NPA during an year, isn't it? We have seen the formula of slippage ratio as well in the FSR classes, if you recall it, right? So slippage is basically addition of NPA during an year. So slippage, this addition of NPA, the one of the important constituents in these bad loan categories, whatever new bad loans are accruing, are the retail loans. This has been highlighted by the Financial Stability Report. It has also flagged that an increase in the delinquencies or or loans with early evidence of overdue payments among small borrowers who have borrowed less than 50,000. So these small borrowers, they have been on the list of defaulters who have borrowed less than 50,000. Who have borrowed less than 50,000. So they have been on the list of defaulters. This is highlighted by your FSR. Just a second, give me a second. Okay. So are you getting this point? What is the issue? The issue is that, the Financial Stability Report has only highlighted that these are the smaller borrowers who are on a verge of default. Why? So it has highlighted that an increase in the delinquencies. So what are the delinquencies? Basically those loans which have any amount which was to be paid as in the category of overdue, right? So you have any overdue payment would fall under this category. Are you getting my point? Right? In that case, main constituents of these type of loans are those smaller borrowers who have borrowed less than 50,000. Who have borrowed less than 50,000. So now tell me, isn't it a concern then? We are saying that these are small borrowers in the retail loan segment. Why are we concerned about them? Small borrowers are default क्यों ही करेंगे, right? But these defaults are being, they are stemming from less than 50,000 amount wala category. And this is not something which I am or the author is saying. It is highlighted in the Financial Stability Report by the RBI. Right? So now you tell me, is it a concern or not? Retail boom in India. You have to look at it with a question mark or not. It is a concern, right? It is a concern. Okay. Now, moving ahead. So then the author says that, these are just signs, early signs. This is not still the problem which has taken a concrete form. These are just early signs. If we do not tackle these situations, they can later on become a systemic risk. Yes, concern because there are high cases of default in retail lending. One reason. Second reason, because in these other personal loan category, you don't have a security against those loans. So you don't have collateral. Even if you have, that is not robust enough to cover for the losses in case of a default. Getting my point? As compared to non-personal loan categories, they have proper collateralized lending. So you can at least recover the loan in case of a default, but here you cannot, or it is difficult to recover. Clear? So as of now, bankers are seeing the retail sector as the best to swing towards, but if the incipient signs of fragility in the retail sector lead to spike in the volume of delinquent loans, so the author is saying that presently, banks are moving towards these kind of lending. They are, lending to retail sector a lot, but the author is saying if these signs of fragility in this type of lending in the retail sector, if it leads to spike in the volume of these loans, delinquent loans. So have you understood this term, delinquent loans? These are the loans where there is any amount of overdue. Even you have one payment, one category of or first overdue, that would also come under the delinquent loan category. Understood, right? So that could create such categories, and the retail credit boom may well turn into a retail credit bubble. So this boom, if not dealt with prudency, regulation, supervision, proper credit provisioning, if not dealt with all these parameters, can actually result into credit bubble. Have you understood that? So we see in the financial markets, there's a term of a bubble which has been created. It can burst anytime. So when there are overpriced assets in the market, there is stressed valuation of the assets. In that case, you see bubble is created in the financial market. So this is also a kind of bubble being created in the Indian banking system. Yeah, if you have not paid the interest or any kind of personal loan category where any payment which you are liable to pay is overdue in any form, right? Okay. All right. So I hope this is not the end of the discussion yet, but I hope you have understood whatever trends I have discussed with you, that the retail credit is booming in India. That's why the title I have chosen is retail credit booming in India or the danger is booming. So is it a danger booming? Yes. If it goes unchecked, then definitely it is a danger booming in case of Indian banking system, isn't it? Tell me, yes or no? I hope this is clear to all of you. What are the risks involved? Why are we concerned about this? And then particular category of the other personal loans is a cause of concern, right? टू 2008 में सिक्योरिटाइज था इंडिया, अभी अनसिक्योरिटाइज लोन के कारण क्रेडिट बूम. See, there have been these different trends. We don't say that we do not securitize right now. The bubble is due to this thing. We still have securitization process. It is this, that the deposit rate is also lower. You don't even have sufficient deposits. So then that the gap can be a cause of concern. We still have that securitization process, right? Okay, so now there's this another editorial which is also adding to this topic only. Okay, this has been taken from your 11th July Economic Times. You can go and read this article. So this has been taken from Economic Times of 11th July. So far, we have seen in the early editorial, it has highlighted the problems and the risk involved, right? The risk involved in the retail lending. But now this author, this editorial, it tries to give you the solution for this. So this basically puts a question mark that, okay, we understand there is a risk in this thing. We can say that there is danger booming, there is this bubble being created. But will it be okay to curtail the retail lending when you are growing so fast, when the Indian middle class is in a race of earning more and more, which is where the Indian middle class is one of the active contributors in the economic growth? Will it be prudent enough to curtail the retail lending, or can we go with solutions which increase the deposits with the banks, so that we need not restrict the banks from retail lending, but we can encourage them from for attracting more deposits? We can encourage people to have more fixed deposits in case with the banking system, so that the bank does not falls short of funds. So this solution is something which this editorial talks about, right? That's why I've combined all these these two articles in this discussion. Let's see what the author says. So deposit promotion, it basically talks about promoting the deposits rather than curtailing the credit, retail credit. So the author says that, clear cut points mentioned by the author. First thing, the author says that why are we concerned? So remember one thing, this author is highlighting the fact that curtailing the credit is not a solution. You agree with that? Yes or no? Tell me. We know that this is risky, but in this time when you are aiming towards becoming one of the largest economies of the world, you need credit in every sector, right? If you have to grow, you need investments. For that, you need credit. Curtailing credit can be a cost or can be a compromise with higher economic growth. Yes, so I also agree with that. But then what can we do? We also cannot compromise with the liquidity of the banking system, isn't it? Because it is the banking system's liquidity which provides a buffer against any economic or financial risk. So in that case, the author says, causes of low deposit growth, let's explore them. What have been the causes of low deposit growth? Let's increase the deposit growth then, right? Rather than restricting the credit. So the author says that banks have been unable to attract more time deposits due to certain issues. Indian banking system, it has been unable to attract more time deposits. What are time deposits? Time deposits are those deposits which are for a longer period of time or for a fixed period of time, like your FD. You cannot withdraw them on your demand, unlike your demand deposits like savings account, etc. Right? So they have a lock-in period. If you withdraw or if you dissolve that policy before that lock-in period, withdraw from that policy, the bank charges you certain penalty on the interest rate, right? Understood? So what are the reasons highlighted by the author? Author says restricted liquidity due to lock-in period. This is the first thing highlighted by the author. The author is saying, why are we unable? So why is this deposit growth lagging behind the credit growth in India then? First reason author is highlighting, restricted liquidity. We are not very much happy with the liquidity condition we get on the time deposits, right? Due to lock-in period. You all know there is a lock-in period in fixed deposit. You cannot withdraw the amount before the completion of that maturity or the lock-in period, right? That can range on different types of FDs offered by different banks. There is no fixed lock-in period, that ranges or varies as per the banks, as per the type of the FD, right? This is one of the reasons. Second, even if you want to close that thing, premature closures, before the maturity period, so in that case, penalty is levied on you. Penalty, for example, it is almost in a range of 0.5% to 1% on the interest rate. That depends on different banks, whatever they are charging. But generally, this is the range on the interest rate, right? So you have penalty. This also discourages you from depositing more into the fixed deposits. Then lower returns. What happens is, we have discussed this word monetary transmission. What is monetary transmission? Late monetary transmission due to deposit rates is also a concern as compared to the lending rates. Tell me, what is monetary transmission? भूल गए? इतना इतना जल्दी भूल जाओगे? Monetary transmission, see, the transmission of the monetary policy, nothing else. When you transmit the policy, monetary policy decisions into the economy, right? So author is also saying lower returns. Why lower returns? The monetary transmission is slower in case of deposit rates. Now what happens is, as we have discussed, that whenever a monetary policy decision is taken by the monetary policy committee, in that case, suppose repo rate has been increased, so all other key policy, this is the key policy rate, so all other interest rates, they also generally increase, but then they do not increase immediately. Okay, what happens is, generally this transmission of this decision to lending rates is faster as compared to deposit interest rates, whatever interest rates they are offering you on deposits, right? So they transmit it very effectively, very actively on the lending rates, whatever interest rate they charge you when you want to borrow. But then interest rates on the deposit with the bank see or witness a late monetary transmission. Yes. So in that case, your returns get affected. Now if you have lower returns in certain type of deposits, why will you want to deposit with the bank? Also at the same time, you see Indian middle class particularly investing heavily in the mutual funds and the SIP. Some of the mutual funds, they are offering very much flexibility, liquidity, as well as higher returns. So you see, we have been continuously discussing that middle class from India particularly is heavily investing in the SIPs or via the SIPs as well. Voice is scattering. Is it okay now? Yes? Better? No? I don't know what is the problem. Okay. So now these are the reasons. So if you have better alternatives which are offering you good returns, why will you deposit with the banks? So these are the concerns that deposit growth in India is also getting affected. Now why are we discussing the fixed deposits only? Because these are the deposits which provide with a long-term liquidity or fund availability to the banks, isn't it? Are you getting my point? So this is what the author has highlighted. I hope you have understood all these points. Now moving ahead, what are the solutions? What are the solutions to this? How can we increase this deposit growth in India if these are the challenges? So the solutions are also given by the author, right? So the author is specifically mentioning that, rather than restricting the credit growth, particularly in the retail sector, whatever sector is there, monetary transmission. Monetary transmission means, as the name suggests, only transmitting the decision of the monetary policy committee. Simple, right? Whenever I say monetary transmission, so if there is a meeting of the MPC, monetary policy committee, suppose they have decided to increase the repo rate. So if they increase the repo rate, that effect will not translate into Indian economy unless the interest rates, other interest rates, they also change accordingly. So then the lending rates by the banks, they also have to increase. The deposit rates, they also have to increase. This is monetary transmission. Otherwise, RBI increasing the repo rate would have no impact on the money supply. This is what we call as monetary transmission, transmitting the decision of monetary policy committee into the economy via these channels and via these quantitative tools, right? Understood? Okay. So now talking about the solutions, the author is suggesting that rather than restricting the credit, we can increase the deposits. We can go with increasing the deposits. How can we do that? So first solution provided here says faster monetary transmission to deposit rates. So if the challenge was that we have slower monetary transmission on the deposit lending rates, we can ensure that these monetary transmissions are faster, so that the people get the benefit of any interest rate hike. Now see, look at this thing. Whenever interest rate rises, loan become costlier, but then depositing becomes or deposits higher interest rates, they become an incentive to deposit more, isn't it? That's how they are able, RBI is able to curtail the money supply in the market. So if some bank is offering you very higher interest rates, you would want to deposit your excess funds with the bank, yes or no? So effective monetary transmission can offer you better returns and then can attract more long-term deposits with the banking system and the NBFCs. Agree or not? Yes, anyone? Yes, right? Second thing, prorated earnings without penalty in case of early closures. Prorated, basically prorated earnings means the compensation basically, right? So if whosoever is there, the account holder wants to, seize or wants to withdraw or close that account prematurely, that has to be there. You should allow that without penalty, without penalty. So this is the thing, without penalty. If you do not charge penalty, then more people will be attracted towards FD. What prevents people from placing their funds into FD is, that they think, okay, this is the lock-in period, so we will not have access to our funds for this much period of time. So in case we require certain type of funds, we require liquidity, we require cash, what will happen, where will we go, right? All these questions in mind of the people. So if it is easier to exit from that scheme without any penalty, that would encourage more people to deposit their funds in these kind of deposits, term deposits or fixed deposits, isn't it? Yes or no? Yes, right? So next thing, the author is saying tax benefits and flexible interest rates. What are tax benefits? What are tax benefits? What are tax benefits? So the next suggestion given by your author is, tax benefits are any kind of tax deductions, any benefit which you, yes, tax exemption, any kind of benefits which actually reduces your tax liability in form of tax deduction, rebate, exemption, whatever the category is, right? So we can provide tax benefits which reduces the taxable income if someone deposits their money in these kind of deposits. So there's this section 80C, section 80C of Income Tax Act, if you remember. So section 80C provides for tax exemption on 1.5 lakh rupees, up to 1.5 lakh rupees if you deposit that into tax saving FDs, right? So these kind of provisions, they can be extended so that people are incentivized to have more deposits with the Indian banking system, and then they choose to deposit more in comparison to investments in all these financial assets. We are not saying that these investments should not be there in the financial assets, but depositing with the bank is also crucial if you want to utilize household savings in the investment or economic growth process, right? Also, flexible interest rates provide flexibility in the process. Now, one thing was also highlighted in this editorial that, opening a demat account has been made very easy by SEBI. But it is not a case when you want to open a fixed deposit. Yes or no? So, this convenience has to be introduced. If you want to have more deposits of the people with the banking system, you want to make the entire process of opening account, depositing, as well as exiting from a scheme very easier and convenient for the people. So now you see, demat account gets opened in a few minutes, right? SEBI has made it very easier. But it is not the case with FD. So these things provide flexibility, provide flexible interest, do not charge these penalties. All these things are the solutions given by the author. These are the solutions given by the author of the editorial. Now, if I ask you, tell me, you have understood this entire thing? We have discussed the causes. We have discussed what is the issue, that why retail lending is like danger booming in case of India, right? But still then we have another set of opinion which are saying that let it be. We can have buffer created for him, right? We can have a buffer created for it. Rather than curtailing the credit boom, rather than curtailing the retail credit, although it is risky, we can go for alternative solutions. What are the solutions? We have seen. Promote bank deposits. Promote bank deposits, right? What is your opinion in that case? So now if I ask you, you have understood this entire pattern going on. Also, it is adding to your understanding of financial stability report. This is something which we have discussed there as well. What is your take on this? What is your take on this? You also agree with the similar opinion, or you have something different to tell us? Anyone? I'm waiting for your responses. Agree, but they can introduce deposit scheme. Okay. Credit restriction should not be the option, rather relative solutions can be adopted. पोस्ट ग्रेजुएट किस चीज के लिए आपको करना है? इट्स योर डिसीजन. इन सर्टेन एग्जाम्स, ओके, हाँ, तो अगर आप ऐसे एग्जाम्स टारगेट कर रहे हैं जिसमें देयर इज दिस एलिजिबिलिटी of post graduation, then you do it. Otherwise, if you don't find it useful, then there is no issue with that. Okay, right? So I have got your opinion. You all agree with this solution only? UPSC के लिए NCERT, if you ask me, UPSC के लिए NCERT is only the geography NCERT which is the most relevant one still. You know, this year paper also they have given direct questions from geography NCERT. I don't recommend any other NCERT for UPSC. You can read that can create foundation for you, but most useful NCERT is the geography one. Okay, anything else? Now, since you have understood this entire thing, I hope these editorials are helping you, right? You have understood this pattern going on. We will keep on discussing these editorials further. It will add on to your understanding as of what is going around you, right? Any doubts from today's class, or shall I end this session here? I hope this was useful for you. Remember, these trends and the data, they can be useful, right? All clear? No doubt? Okay. So I'll see you in the next class. We will take up the further editorials and whatever relevant important news are there in the next editorial session. Okay? Till then, have a very good day. Keep on studying. Thank you for being focused and interactive in the class. I'll see you all in the next class. Thank you so much. Have a good day.